Hello and welcome. This is DigeconLIVE, brought to you by GiveOnLive. Thank you so much for joining us today. We have very exciting topics. We are talking about the Kraken Bank Charter and seeing what are the implications of the industry, the fintech industry, and what we can do moving forward. Please remember to subscribe on Facebook, on YouTube, to be aware of the great shows, the breaking talks that we do here on DigeconLIVE. So I would like to just first introduce the topic, what we're talking about today, and then go ahead and get straight into the conversation. So I have my guests here today, and Kevin Mirko, Dan Truque from Symbionet and Coin Metro. So Kevin, talk to me. How about you start and let us know what's the deal with this Kraken charter?
So we're talking about Kraken Financial. Basically, Kraken was approved for what's called an SPDI license out of Wyoming, which is Special Purpose Depository Institute. So the word bank might be a bit too sexy, though this charter does involve a lot of services that a standard bank would provide. It's not quite a full-fledged banking license. I mean, why would you want a banking license most of the time? Well, you want to be able to loan money. That's usually what one of the main hooks of entities looking for banking licenses, to be able to get into that specific business. This license doesn't cover loans. You don't get access to that. You can't loan out more money than you have, but you can't loan money out at all, actually, unless it's tied to specific fiduciary services. But it's obviously still a big step for crypto. I guess Kraken's going to have a lot of fun saying no when companies that work in fiat want a bank account and they say no, too risky. So I guess they're going to have a little fun with the license. But it is a big step. It is something that I think was inevitable at some point. It's nice to see. I met, I think her name is, I'm trying to remember the woman's name in Wyoming. I've met her at least on one or two occasions.
Caitlin
Long, yeah, that's right. So Caitlin,
woman, yes.
I've met both Kate.
She was actually chairwoman of Symbion's board a few years ago.
Okay.
Oh, fantastic.
Yeah.
Do you know her personally, Ken?
I joined after she had already left. She actually led the efforts in Delaware to enable, the changing the law to allow companies to register directly in a distributed ledger, which that then created like a domino effect across multiple states. Yeah, no, so she's done a lot of great work.
So she's obviously been on the forefront. Wyoming's trying to be as progressive as they can be. I mean, they're Wyoming; they can be as progressive as they want. They're not. They can have a pretty high risk tolerance. To kind of push the boundaries as much as they possibly can on a state level. And obviously Jesse Powell and Caitlin Long, I think, have known each other for quite some time. So I do think it's fitting that Kraken's probably the first entity to be approved for one of these charters, which I think was initially launched in 2019. So obviously they went through a pretty probably rigid process to gain the license. There is, I think, minimum capital requirements of about $5 million US. So it's not a small license by any step of the imagination, but
Kevin, $5 million that they have to have stored on site in cash fiat in Wyoming, or how does that work?
I'm not sure if Wyoming works on a bond structure or it simply works as minimum capital that needs to sit inside of one of their corporate accounts in fiat, yes, in US dollars. So, but I don't think it's a bond structure. So most states in the U.S., it simply means that inside of the company's accounts at any given time, they have to have a minimum of, and in this case, it's $5 million US. Normally, those types of regulatory requirements when it comes to minimum capital is to ensure that if anything happens to that licensed entity, that there's enough capital to cover a certain percentage of their total risk exposure, which is essentially their client AUM. The assets under management that they have from their client base. So $5 million is on the lower end for banking licenses. You can actually acquire full banking licenses in some countries for $5 million in regulatory capital. But in the U.S., it's definitely on the lower end because most full-fledged banking licenses in the U.S. require $20 million in terms of minimum net capital.
$20 million. Wow.
So it's on the lower end. What I think one point I'd like to make, and then I'll hand it over to Dan so he can chat for a bit. But when I think about Kraken's, I think about any exchange's business model. There's certain services, and most of the services you offer as an exchange, at least in traditional financial speak, would be considered to be fiduciary services. because you, as a centralized exchange, are taking the capital, you're custodying the capital, and you're giving services based on the fact that you have control of that capital. You're giving access to a matching engine. You may be giving access to other services to earn passive income like staking or whatever. But all those services usually tie back to the main aspect of that you have custody of those funds. And those are essentially fiduciary services. And this is essentially the main aspect of this license. So in my mind, it's almost like, Kraken, as far as I know, up to this point, had no licenses in the US, nothing. They didn't have an MSB license in any states. For years, they had absolutely no licenses anywhere. They recently acquired a company in the UK to get a futures license to cover that aspect of their business. So I think it's more about them legitimizing what they've already been doing. It's not, and now obviously this license will give them the ability to offer limited banking services to their clients. So eventually I'm sure they'll start to expand. It doesn't give them carte blanche to offer those services to anyone, anywhere. But I think what it really does is legitimizes what they've already been doing. I think they're playing a little bit of kind of regulatory crystal ball here, where they're envisioning that in the future in the US, especially once, the US regulatory system one big piece of news that kind of ties into this is that now instead of having to apply it to 50 different states for MSB licensing, there's now one licensing board that comprises of 49 states. So the U.S. is really starting to. You have the Office of the Comptroller, which is now controlled by an ex-Coinbase executive, and since that's happened, there's been this very quick, very progressive kind of move. And this obviously this particular license happened in 2019, so not necessarily before the Comptroller, but we're starting to see this really progressive move to start and I would say fine-tune the regulatory environment around crypto in the U.S. And I think they see that as a sign, and they don't want to get pushed out of one of their main markets. And I think this license is more about legitimizing themselves under their basically tied into their current offerings that pretty much every exchange offers, which again are mostly fiduciary type services off of, but for crypto assets rather than for fiat.
Nice, fantastic. Dan.
I think a key question, and I don't have the experience to know this, but I think one of the big implications would be if they have the banking license in Wyoming, how easy is it for them to passport that into other states?
It's not. They
cannot. Okay.
No, so there's no type basically you need a banking license in every state, and just like MSB, that doesn't mean you can't onboard clients from other states. So that's still there's a certain amount
of. That's great. Yeah.
So, but for instance, MSB licensing is the same thing. So MSB, you can have an MSB license in Alabama, for instance, and still
onboard. What does MSB stand for?
Money service business.
Service business. Okay.
For most crypto companies in the EU, that's like an EM. Well, it's much. You're allowed to do much less than an EMI or an electronic money institution in the EU, but generally speaking, let's call them kind of like cousins in terms of licenses. So in the U.S., every state has their own MSB license structure and banking license structure. There are programs where you can apply for multiple states. So you're still getting all the state licenses. You just have one supervisory board that may be comprised of 10 people that represent 15 states, something like that.
So banks like Chase and the mainstream banks, they have individually applied with compliance and legal to every single state. Is that how
they have federal banking charters, which allows them to offer certain services across the entirety of the United States, and they have specific state licenses in every state.
Wow.
So with this, that's why I think I like it. I own an exchange, and out of all the exchanges that I would say we would compete with on some level, there's only a few that I actually like, and Kraken's one of the ones I like. I think generally speaking, they've been a little bit they've been playing this role over the years of kind of being kind of anti-establishment, but still kind of trying to be compliant. And I respect that stance. I think it's a much better stance than, putting the middle finger at the banks and the establishment and just expecting that, everything's going to work out. So I respect them in that way. And I've met Jesse Powell on I think one, maybe two occasions now, but I respect the business model, and I think it's great to see that they're moving forward. And like I said, kind of legitimizing their current structure, but it's not as sexy as it sounds. Kraken is now a bank. Well, they're a type of bank. They have a license that falls under if you had columns of licenses, which was like money service, bank, and whatever. This falls under bank. but it's not like they can open up a branch and start giving you a checking account. In Wyoming, and they might be able to do that. They might be able to provide specific services, but outside of Wyoming, the amount of services they can offer starts to lessen. But
Gotcha.
it still gives them precedent, and getting a license in another state becomes easier because you have the precedent of the fact that you're already licensed in another state. So it does make it easier, but it's not like Europe where you can, basically file a piece of paper and you passport to another country.
How hard do you think it was for them to do this process? Did it take months? Did it take years?
It took months because the license officially came online in 2019. I'm not sure which month. I think it's somewhere between mid and end of 2019. And here we are, end of essentially getting into Q4 now in the next week or so here of 2020. So generally that's not that bad, because for any type of banking charter or license, to get it done within a year, pretty good. Look, we just opened a bank account with a bank I'm not going to mention, but we opened a new bank account. It took 7 months.
Wow.
That's with an onboarding process. That's not an application, or that's just onboarding. So a year for a some type of charter that's close to a banking license, that's pretty good. And I think Wyoming was just as incentivized to get the first license out the door as Kraken was incentivized to acquire it. So that definitely.
Yeah, sure. They want to show. So this is the thing. So, in Puerto Rico, for example, a lot of the crypto community has moved to Puerto Rico because of tax incentives. It's called Act 20. Now it's called actually Ley 60. So crypto folks have moved to Puerto Rico, only at dismay that their bank's account starts getting shut down when the banks realize that they're getting profits from exchanges. So professional traders or other industries, banks don't want the crypto money. So what I think everyone was hoping from this charter was, okay, well, now I can open a Kraken bank and I can get all my profits from my trades going to my Kraken bank, and life will be normal.
I think that's a bit of a utopian kind of understand, because the thing is that it's funny because because I read something from Jesse Powell, I think it was on Twitter, and essentially he said, like I said in the beginning, it was something like, I can't wait to say no to a company that deals in fiat, because fiat is used for money laundering. And it was a funny statement, and I kind of laughed at it. I giggled a bit, and it made me feel good just all over for a few minutes. But the reality is that he has a bank charter now. So fun and games aside, he has to abide by very many of the similar tactics that many banks abide by. So I'm sure they're going to take more risks in terms of onboarding, crypto companies, because, well, they understand that risk better than a bank would. But there's still a large risk in onboarding companies that deal with third-party funds, because you have to trust that company understands how to do their own risk management and their own. That's where really the problem comes from crypto companies onboarding with banks. It's not so much that, it's crypto. Well, in the beginning, it was, you said blockchain or crypto, and they kicked you out of the office. And that's simply because they didn't understand the business. But even when they understand the business, I've run licensed FX companies that couldn't get bank accounts. And the reason is that they know you're onboarding third-party money. They know you're dealing in countries that perhaps they're not dealing in. For instance, you may have clients from a country it's legal to onboard clients from that country, but as a bank, they choose internally not to. And so they have to now trust that you know what you're doing. Your risk policies are in place. You're actually following them, and you know how to, you make reports, and you're actually doing what you're supposed to be doing to be compliant. And that's pretty tough, especially when you get a crypto company that's a bunch of 20-year-olds that don't even know how to spell the word compliance. So I don't think it doesn't necessarily mean that Kraken's going to become, the place where all the crypto companies go to get banked. At least not yet. But I think it's the precedent, which is the most important thing, at least right now.
Right. I find it fascinating. We've all heard so many things about HSBC and just these institutions that allow these ridiculous kinds of money laundering with fiat, right? Mm-hmm. Now, have you guys heard of the FinCEN files?
Yeah.
Dan, did you hear about that?
I haven't digged into it, but yes. But one thing about money laundering happens within banks all the time. It's not something that they do on purpose. That's actually what we have with the AML restrictions. And actually, with respect to this Kraken bank license, this actually enables them to run something somewhat crypto related, but still maintaining that AML KYC. So when I first heard about it, I was like, well, what does that mean, that they'll be able to bank all these cannabis and guns and gambling operations that don't get usually banked by regular banks? And like the answer is no. Once I looked into it, no, they still need to abide by everything. So it's not like it opens the floodgates to like just bank anything. I think really for me, it's what I think is groundbreaking from this particular license is how it can affect stablecoin issuance. If you are actually able to issue a stablecoin and you're the bank holding it, then you are it reduces essentially you have more direct exposure to the issuer. When you get a coin from Tether is not the bank holding the reserve, so you're exposed to Tether, and then Tether is exposed to the bank that they have. When you're doing something from Paxos or Gemini, you get it from them, and then somebody else is custodying the funds that they have, so they're not custodying themselves. So in this case, essentially the main thing is that you have that self-custody directly from the bank. Earlier, the reason I was asking whether or not they could passport into other states was because I was wondering if eventually they could get access, for example, to the Kansas Fed and actually have an account at the Fed, in which case technically you would be issuing a stable coin backed by dollars held at the Fed. That essentially means that when you're interacting with a stable coin like that, that's pretty much as safe as it gets. Like the next step of that would be just if it's issued directly by the central bank. So it would be like a pretty solid if Kraken decides to leverage this to start getting into the stablecoin business.
Yeah, and there was just legislation passed as well that's allowing now banks the Office of Comptroller as well stated that banks could hold reserves for stablecoin issuers. So that's obviously saying in another way, like Dan said, that Kraken could become a stablecoin issuer and be the bank that, and actually without even having the ability to have a license in the same state as one of the Fed banks, they will be holding capital, and they still could hold capital potentially with the federal banking system directly. So I think the word of the day then is disintermediation, right? I mean, this takes one more
intermediation
out of the. I mean, yeah, I thought the whole notion initially of stablecoins was so weird for me. Not because, I mean, obviously for clearing and, not clearing, but direct settlement things, it made a lot of sense. But for all these guys that were always screaming, saying that they didn't trust banks and they didn't trust the dollar, and they're putting their money not only in a system, then they have to trust a third-party company and they still indirectly trust the bank, and they also still trust indirectly the value of the U.S. dollar. So
let's break that down. So again, when you do not own your keys, you do not own your own crypto. So when you're using the exchanges to trade, right, and then you put you hold, they're essentially holding your assets. And if anything happens to them, if they get audited and they get frozen, then you're screwed. But my question is Kraken also going to be kind of a private custody holder? Let's say, I have 100 Bitcoin, and I'm tired of owning my keys. I'm tired of hiding it in the basement. I just want a bank to I want a lockbox. I just want to give them my assets, and I want them to hold and custody it for me and make sure, that it's safe. Is Kraken going to be doing those kinds of custody services for not only large institutions, but also individuals?
I mean, according to the OCC, not only can Kraken do it, but any other bank or financial savings institution.
Any
bank can now. I think they could do it before. I think what the OCC was saying was just clarifying that, by the way, guys, this is okay with us now. The big thing about risk is that, when you don't understand something, you're kind of and you're against. I mean, if you work in a bank, you're against risk. I mean, at least to a certain extent. But if you don't understand something, you're definitely going to take less risk in that particular industry because you don't understand it. So the fact that the comptroller right now, the comptroller of the currency was an executive at Coinbase. The guy understands the intricacies of crypto and understands there isn't the same risk that's viewed by other institutions and other people in government and in the regulator. So I think for that's why I think Kraken probably will take more risk of onboarding certain institutions and providing certain services than Bank of America will, or that Chase Manhattan will, because they instinctively understand the market better than those institutions. But one thing just to point out, so the type of charter they have is SPDI, and there's now DI, or depository institutions, have been around forever. Historically, those are the guys that provide on-ramps into capital markets. So essentially, you want to buy stock and you have dollars. Well, that sounds stupid now, because obviously it's pretty easy. You have Robinhood or I don't know, whatever. But let's backwards, 30 years. You had dollars and you wanted to buy a stock on the Dow. Well, that wasn't all that easy. So the depository institutions were created to create that. They were the on-ramps and off-ramps of the traditional financial marketplace. So SPDIs, again, it's kind of a mimic of what any exchange already does, at least ones that provide fiat on-ramps. It's basically legitimizing that kind of portion of their business. But what I do think it also means is that I think Kraken, what it could mean, so speculating here, Kraken could be looking to actually start to create maybe some tokenized securities. They have the futures in the UK. They now have a banking license that allows them to do depository institution type business. And I think if they're really forward thinking, they probably already know that the CFTC and the SEC at some point will take over CFTC will probably take over, Bitcoin trading at some point, because they already said that they think it's a future or a commodity. Sorry. And if that's the case, then that means the license, you need 25 million for that license, minimum capital requirement.
Oh, wow.
So I think they may be starting to build a system as fast as they can to support new regulatory kind of changes in the U.S. And part of that may be because they specifically went for a depository institute license, it could mean they're eyeing tokenized securities. So they become the first on and off ramp for tokenized securities into a tokenized capital market.
Oh, wow. Okay.
That could be years off. It's not going to happen tomorrow, but I do think that they do seem to be forward thinking, and they've always been kind of progressive on that side. And now they're really starting to push in licensing. They got the futures license again in the UK. Now they have a banking license. I'm assuming they're not stopping there.
Well, this is the thing. There are so many exchanges, and I do believe that new people into the industry. There's a few that I can name, maybe 5 that I can name that I maybe trust, maybe 5, right? But that's also because I've been in the industry a long time, and I know 2014. That's golden age, right? So if someone has been in the industry a long time. These are the ways that we kind of tell, okay, well, the background of the founders and things like that. But there's so many exchanges right now. Let me ask you guys both, what do you think this charter will give them a distinction, with PR and being able to really attract and get the trust of users, especially with what's going on with DeFi and these other kind of scams in the crypto industry? Because crypto gets blamed for every single scam. We're just blamed. Yeah.
The main thing is that if exchanges start getting this type of banking licenses, to a certain extent, if it's a bad exchange, it's going to continue to be a bad exchange. However, once you get a banking license, you need to abide by a bunch of regulations. So it should, at least on paper, make them more secure if they're run like they're supposed to as a bank. Whether or not some of these exchanges that just run like a very informal business can actually graduate to that once they get the license, that's a different story. But technically they should.
Yeah, I tend to agree. I think that we're getting into I think there's going to be layers of licensing in crypto. So there's no real need, to be honest, for an exchange, even if they operate in that world, to ever acquire a banking license. There's no need. That doesn't mean getting a banking license is a bad idea. But you can use other license structures, which are less onerous, and provide all the services. Even take crypto out of the equation. You just want to be like a Western Union, or you want to move money. You don't need a banking license. You need an MSB license in the US. You need EMI license in the EU, UK, et cetera. So I think that there's going to be layers, just like there's layers in the traditional financial market. You have banks. You have companies that provide, hedge funds. You have other companies that provide certain financial services, and these guys all work together to create the ecosystem. And I think that's going to be the same. But what's going to start is that all those fringe guys, all the guys that aren't regulated, aren't licensed, will slowly but surely be pushed out of the market. And protocols like Uniswap and things like that, which, to be honest, there is always governance and the fact that regulation requires some form of governance is going to be very difficult, especially KYC AML, to be decentralized to 100% extent. Now, obviously, there's lots of companies working on decentralized, sovereign IDs and all these different things. But making it work is one thing. That's probably the easy part. Getting countries to adopt it, that's going to be difficult. So in the next 5-10 years, you're still going to see even protocols like Uniswap probably will fall under the regulatory radar. For various reasons. Uniswap, if you're sharing liquidity, that means you're interacting with other people. Because that liquidity is actually providing one of the mechanisms by which exchanges can happen. What does that make you? That may make you a regulated person by providing that liquidity. So there's a lot of touch points. And I think that slowly but surely, and now faster. So it was very slow for 2014, 15, 16. You didn't really see any real maturity on the regulatory side. You just saw a lot of talking heads talking about, what may happen, but now we're really starting to see it pick up, especially in the US. The US in the last 6 months has really started to put kind of rubber to the road in trying to structure how crypto is going to mature inside of the country. And usually the US gets followed. From a regulatory angle, what the US does, everybody else pretty much follows, at least the major regulators around the world.
And also, to a certain extent, if a bunch of exchanges start getting the SPDI license, it helps institutional players start trusting the system more. I'm gonna kind of give some background. When in traditional exchanges, if I go and I buy stock in Nasdaq, I don't buy directly. Well, actually, let's say I'm buying a tech stock from Nasdaq. I don't buy it directly from Nasdaq. I go through a broker that goes and gets me the stock. That broker is not even holding my stock. That is held at custody somewhere. When I go and I trade that on the exchange never has possession of the stock. That is very different from the way it works in crypto, where when you decide to go trade your Ethers or Bitcoin on an exchange, you actually give them custody of those assets. That does not happen in the traditional world. So at least if you start essentially by peer pressure, forcing exchanges to get a license that essentially has guidelines on how they should custody these assets, that's beneficial because it starts making it more legitimate, and then other institutional players may be more likely to interact with these exchanges.
Yeah, that's correct. I would throw one thing in there just to say that I think in terms of market structure, crypto is more structured kind of like FX because they're both OTC markets. And in FX, it's a similar setup where the FX broker doesn't ever need to it's not like they have stacks of US dollar and euro sitting next to them, and as people trade, they adjust the stacks. In fact, it's all synthetic for the most part, based on a credit mechanism or some other mechanism. So, but Dan's 100% correct in terms of when especially as we move into more to tokenized securities, bonds, equities, convertibles, all these things. There's probably going to be, I don't think we're going to mimic traditional markets 100%. In fact, we shouldn't, because traditional markets capital markets suck, and they're very poorly structured globally. So we shouldn't follow that. So that I think is the one place that probably as we start to progress, it's the one area where crypto or blockchain or tokenized securities, or however you want to call them, STOs, are going to differ. The entire structure of the market will start to differ from traditional marketplaces for good reason.
That's interesting. Wow. Actually, go ahead, Dan.
Well, no, I was going to bring up the point that something, if we keep going down the stablecoin route and we start getting a bunch of banks issuing stablecoins backed by 100% assets, and actually recently the EU, I think it was Germany, France, Italy, Spain, and Netherlands decided that they were talking about regulation for stablecoins and ensuring that if anybody issues a stablecoin, it needs to be in a European currency at an approved institution, or else they pretty much had to cease business. So there's a lot of regulation coming on the stablecoin business. However, one of the issues that I don't think many people are thinking about is that if you start having a lot of these stablecoins just gathering massive amounts of assets, and they're backed they're held with in reserves with 100% that are 100% backed. At some point, you may start deleveraging the economy, because the way the fractional reserve banking system works, I deposit $100 into Bank of America, and Bank of America, with those $100, can actually like hold only like $8 or $10 and then lend that, and eventually that multiplier effect leads to the fact that you end up that my $100 of cash that I deposit generate somewhere between like $1,000 and $1,200, depending. I forget what the exact ratio they're supposed to hold. If on the other hand, people start just using stable coins that are 100% backed, then you're not going to have that multiplier effect, which means you're going to suddenly start contracting the money supply. And I mean,
yeah, the M1 supply especially. Yeah,
exactly. So at that point, I mean, we need an economist to think through how this could affect. But it's a big issue. We're talking about like massive deleveraging on the money supply, and that
because I think
I can break something somewhere.
To touch on Dan's point, most people don't. I mean, when we talk about when financial people talk about money, for the most part, most of the money that exists is credit money. It's not actually money, right? It's not printed money.
Right. They're spreadsheets.
It's all credit. So the credit money supply is massive in comparison to, the actual money supply. And that's how, I mean, we could have a long conversation about Bretton Woods and the gold standard and why the gold standard was let go. Imagine a lot of people all the time, I end up in these, I don't know how it's me that ends up in these conversations, but I end up in conversations, but gold bugs and guys.
I think you like the conversations though, Kevin.
I do. I get fierce and it pisses me off, but I like it. But the idea that the gold standard would make sense in 2020. There's not enough gold right now that the U.S. doesn't own anywhere near enough gold to be able to cover. Never mind the credit money supply, but even the fixed money supply would be difficult for them to cover as it started to expand, especially when they start handing out checks to every taxpayer. So there's kind of the whole, I don't know, the conversations you have in crypto, sometimes it's clear that a lot of people don't understand how things work. And that's why when we hear regulators talk, to Dan's point, we hear a lot of regulators talk about, we don't want stable coins to affect negatively the economy as a whole. And people don't get why they would say that. Like, oh, that's just because they want the money to control the people. I don't know, whatever. They make up these conspiracy theories. In reality, it's just the way the system is made. Just as Dan said, if you start reducing the credit money, the credit money supply, and the only thing you have at your disposal, or what's really getting transacted, or at least the majority of transactions happen to be backed 1-to-1, you drastically, I mean, not even you reduce the money supply by multipliers in the double and triple digits. And it depends on the country. In some countries, it's almost all credit money.
Wow.
Yeah.
Huh.
And actually, Kevin, you brought up the gold standard.
Yeah.
Got me thinking, like, I wonder like if the US would force, or if we would have kept the gold standard, I think we would be in a scenario where the tail is wagging the dog, and then the price per ounce would be like $1 million. The only way of having gold back in all the outstanding currency.
Yeah. They would have to pull gold off the open market and basically manipulate the price of gold, because there'd be no way. I mean, to be honest, regardless of what the underlying economy, economy is, whatever it's, whether it's gold standard, whether it's whatever, they'll find a way. I mean, you always find a way. If you have a crisis. But anyway, I think it's something that most people simply don't. Well, most people don't understand how finance works. I literally had a phone call the other day with my mother, and I talked about. We were talking about fractional. I was talking about fractional reserve. I don't even know how we got on the topic. Don't ask me, because I don't remember. She said, "Wait, so the bank loans more money than they have?" I'm like, "Yeah, that's the business. That's literally why you want to be a bank." Right now they don't even have limitations in the U.S. They can load infinity amount in comparison to what they have on their balance sheet.
It just doesn't make any sense.
Yeah. Well, it's the M1 money supply. They need to. It's the credit money supply. That's the reason the economy so well for years has been so great in the U.S. Without that credit money, everybody would be living in wooden shanty houses and still riding horses.
Yeah, I like horses. Well, Kevin, Dan, let's go ahead and go to the questions. We actually have a question from Jens at Denmark, and then it reads this: if I may ask, if banks will not be traditional banks and exchanges are not needed in crypto, well, we didn't say that exactly, but how then do you picture a future hybrid? Well, I think what she meant was if exchanges don't necessarily need to be banks, and how do you see this kind of hybrid of the exchanges and crypto and banking and custody playing out?
Yeah, you want to take a shot at that? I could jump in.
Yeah, you can start and then I'll complement.
Okay, so I think anyway, I think the term bank is the idea, the definition of bank is going to change. So I think if you talk to your grandfather and ask him what a bank is, he'd probably be like, it's a place I can go. I know my banker. I ask him I have a business. I need some money. I ask him. He gives it to me. I need a house. He gives me the loan. I pay it back. Everything's cool. Now, I think the definition of bank is probably like, those scumbags that stole my house. And I think progressively we've gotten to the point now where the definition, even though the core operation of banks hasn't changed all that much in the last 100 years, the idea and the ideology that people put behind banks and what they think when they hear the word bank has changed. I don't think, in the short to medium, even to long term, probably as I'm still on this planet, let's say banks, I think if you think about traditional versus crypto, this is how I'll put the answer. If you think about the traditional market, if you calculate the amount of transactions that are done on a yearly basis, the amount of capital under management, just kind of a broad scope of how big it is, it's in the sextillion of dollars. Sextillion. One clearing agency in the U.S. does $1.4 quadrillion worth of transfers on a yearly basis. So you're talking about a market that's so massively big. I don't even know the multiplier compared to crypto, but it's not even worth talking about because it's huge. So I don't think there's a world where crypto takes over traditional. What happens is traditional basically kind of osmosis crypto. Crypto becomes part of traditional. And in 30 years, when you ask your grandkids, I don't know how old you are, Jens, but 20, 30, whatever years you ask your grandkids, what's traditional finance? And your granddaughter's a finance major. She's going to go, well, the blockchain and, of course, Bitcoin's not around. But we have, crypto's going to become traditional. That's essentially what's going to happen. So I think definitions will change. Regulatory will change around the technology. That's going to take time. But there will always be traditional. There will always be traditional and alternative. And right now, crypto's the alternative. But in 30 or 40 years, something else will be the alternative, and crypto will be the traditional.
Something else.
So I think there's definitely like 2 points to it. Like one is what I mentioned earlier, that if you actually start having exchanges that provide the custody through this type of like banking license, you disintermediate that need for the exchanges to deal with banks. But that doesn't mean those banks are going to go away, because as Kevin mentioned, like their business is ginormous and crypto just represents like a tiny sliver of it. And then the second part is pretty much also like echoing what Kevin said, that essentially what's happening now is that crypto is getting integrated and accepted into the traditional financial system. And that is a positive for both sides. But it's essentially making both sides more efficient and finding ways to have more efficient payment rails. Anything where you have to do right now, where you got to deposit into a bank and then from the bank go on like wire it somewhere else, that's just inefficient. That adds friction to payments. Anytime you reduce frictions, it improves the outcome in the long term. So I think like, yes, banks will be different in the future. We don't know what they're going to look like. If you think about how banks evolved, even over the past 100 years, there's been a lot of changes. Digital assets have been around. I mean, some people think it's like 5-10 years. No, actually, like banks were allowed to hold digital assets since like 1998, because there has been digital assets since way before that. It's just that now when people say digital assets, people instantly think digital currencies. Digital currencies are like one type of digital assets and a tiny fraction of all the digital assets that are out there. And as we keep then digitizing other assets, that's going to change a lot.
Right. Digitizing assets like real estate. There's just a whole different industry.
Yeah, well, we don't even need to go to like alternative assets like that. I mean, even stuff like doing native bond issuance on chain. There's a lot of bonds that are already like, you hold them at a custodian, and then they're actually like still like existing digital form, and that's how they move around. But then you can also have digital bond issuance on chain, which again would like reduce friction, and then more likely native issuance becomes the norm, and that means there's going to be more bond issuance, which means more credit, more money supply. We go back to all of that.
Yeah,
Well, one caveat to that, however, because I don't this is a big point similar to the leveraging we spoke to before. If we end up in a scenario where you have digital bond issuance and the regulations don't allow the repoing of that bond, every night what happens, like if a bank needs bonds to pad up their balance sheet, then they go and they do a repurchase agreement, which means I'm gonna buy this bond from this other bank and I promise to sell it back tomorrow. You're supposed to only do that once. The problem is that once a bank gets it, they repo it to somebody else and so on and so on. So a given bond may be repoed like 4 or 5 times on a given night. If at some point you're in digital assets where you have enough transparency that you could see that happening and the regulators decide to frown upon that, similar story with the money deleveraging, you would be deleveraging a lot of the high quality collateral in the economy, and that would be that would cause massive issues as well.
That's a very good point, actually. Most liquidity in capital markets, in traditional capital markets, and as well now in crypto, or it's growing, is synthetic. So it's basically built on some type of credit mechanism, whether it's repos or any other type of credit mechanism, even margin for that matter, tends to create somewhat synthetic liquidity. So yeah, there's a lot of consequences to bettering the current system. There's a lot of consequences that can make it much worse in the short term, or it just ends up, again, we do the same thing instead of, I think when you say digital, like from a traditional, I think from the legalese side, we call it like dematerializing. So the market was dematerialized back in the 90s, where you went from paper to, which I would agree is digital, but whatever. But you went from paper to some electronic form. I think the term was more electronic, and now we're saying it's digital, which is really semantics. We're just putting the electronic form of a stock certificate, instead of it sitting on an Excel spreadsheet, it's going on a Ethereum blockchain. But it's pretty much the same. I mean, it's the same thing. When digital's digital, it just means it's not analog, right? So.
Right, and so there was right when they were going to print the first tranche of rewards. What are they called? The disaster relief funds.
The Trump checks.
The Trump checks, yeah. So Trump checks. When they released the Trump checks, wasn't there a discussion with potentially releasing it as a central-backed digital currency? And wasn't Ethereum in those negotiations? Is that my imagination?
So premature that they didn't even mention that. They had no way of doing that.
They had no. Okay, I thought
you would have to give wallets to everybody, and we're talking crypto has a penetration of what, 1, maybe 5% if we want to be super generous, and giving everybody in the U.S. a payment.
Can you imagine the gas fee to open a contract address? About 330 million of them.
Yeah,
right.
It'd be $1,000 an address.
Yeah,
miners would have been happy. There was, I did see talk about. I think they may have held, not specifically about the checks that went out, but more specifically, sometime before that, there was some meetings held, not necessarily at the White House, but where there was some consultation about how they could digitize different aspects of the cards they give for food stamps and things like that. Because fraud on those type of things is crazy. I mean, there's fraud on those cards all the time. So I think it was kind of in line with those talks. And then I remember hearing I think even Brian Armstrong, Coinbase, tweeting and putting out there that why don't we, even the Winklevoss twins, they're all saying Gemini could handle this. I mean, not really. But they said they could. So but they probably would have done. I mean, to be honest, I got to say, when it comes to government doing anything, they're slow and they suck at it. That's why private enterprise always ends up taking over usually enterprises. But the check, man, that first time that they said they were going to issue checks, I got to say they did a decent job to handle paper checks across probably 80 million people in some. It was a pretty short time frame. Was it 2 months? That's pretty good, man. For a large scale government effort, that wasn't bad. It probably would have took longer to give everybody a wallet, to be quite honest, if it was crypto.
You know what? Okay. Well, let me tell you something, Kevin. Let me tell you some personal experience that really hurt my heart. Okay, so in New York City, and then this is the thing about, systems and the private systems and people who get to have these relationships with the banks, with the government, right? So there was one bank in New York City. Okay, I think it's Upper West, or yeah, one bank in New York City. So if you were going to receive these benefits, the unemployment, oh, this is unemployment now, unemployment benefits, right? There was one bank in all of New York City that was issuing these debit cards, okay? And this one bank had only one branch in Manhattan. So
because that's where all the people who need benefits are, obviously, is Manhattan.
Of course not. So you had this line, 2-hour line to get into these branches, and you had just, people of all ages who don't understand what a debit card is, have never used it, and it's like, oh, well, call to activate your debit. I don't have a phone. Do it online. I don't have a computer, right? So it was, I don't know why did they not use a bank with more branches that had more tellers to handle these citizens?
Because
right?
that bank's not run by the cousin of a senator. I mean, come on.
Exactly.
Exactly.
And that's the whole point. Why it's just insane. And I just felt so bad because I'm Dominican Republic background, and I see all these Dominicans, and I just started volunteering and helping them out because I just felt so hurt that they were forced to come from Queens, from Manhattan, from all the boroughs to this one branch and just wait for hours and hours trying to get their unemployment benefits.
Yeah. I mean, anyway, inclusion is not something the government's very good at.
No.
So, especially financial inclusion. They fail that test all the time. That's for sure.
Absolutely. Okay, guys, we're almost reaching our end of our show. So what we'd love to do, this is DigeconLIVE, right? So entering the digital economy. So for those watching, which some may be business owners who are excited about the bank charter, or some might be just individual investors or people that are exploring crypto, what are some action points you may say to either of those groups, just considering this news and taking a step forward in the industry?
So nobody says anything.
Don't get in. Just do something.
Jump right in, Dan.
I mean, my point is like these news are great for the industry, but at the individual level, I mean, unless you're planning to go like get one of these bank charters and create a stable coin, I'm not sure how actionable it is from the individual level. It's more the usual general advice. Like if you're not in crypto, you go buy $50 or $100 just so you follow it and you start understanding what is it to create a wallet, how do you put money in an exchange, just I think more like that general indoctrination. But how this affects you at an individual level, the short answer is it won't. If you have money at Kraken, then great. Now you can have a bank with them, an account with them, and we still don't know if you need to be in Wyoming or not to do that, which just means it's going to make it easier. But
I think hopefully from an individual level at least. So banks get charters all the time. You don't see headlines that say like, I don't know, Bank of Wyoming just got a new bank branch open. Nobody cares. Never make the news, right? So here we have news made because it's a crypto entity getting a bank license. So I think what crypto is doing, maybe on a mass scale, is that it's helping educate people on how the traditional financial system works, and how intricate and in some ways unfair and in some ways kind of asinine. I mean, people are starting to realize what credit money is. They're starting to understand about fractional reserve. Because these things are making headlines because it's been around for a long time. I've never read a headline that said fractional reserve banking is a problem, but I've seen that similar headline, many times in the crypto industry. So I think things like this, keeping up to date and kind of educating yourself about how the financial system works should help you over time. Maybe you don't get involved in crypto, but the more you understand about how the world works, the better you can navigate. So I think at least from that level, keep your eyes open. Don't be fooled. Don't think that your local bank is there to help the community, because banks are heavy money makers, and that's what they're there to do. Right. But they're also a driver behind the economy. So I think just the fact that we're getting headlines that are educating people that you normally wouldn't see from mainstream media is a good thing. And that but even like Dan said, I think crypto. And I don't want to sound like a fucking Bitcoin maximalist or something. But it's not like crypto is the future, But the tokenization, blockchain, and all these technologies will become a part of your future. whether you, and when they do become a part of your future, you probably won't even realize it. So getting involved in it now and understanding it, and maybe even putting some money in the game if you want to take a shot, go for it. Don't risk more than you can lose, like everybody always says. Yeah. But getting involved now, it will be a part of your life. I can guarantee you won't have an aspect of your life that doesn't get touched, especially in finance, one way, shape, or form by these technologies or these type of digital assets.
Absolutely, good.
Indirectly or directly. Yeah.
Directly or indirectly, and
your paycheck will be paid on blockchain. And that'll save you some money because you won't have to pay ADP like $5 to give you a check or a direct deposit. And you will be able, maybe you'll be able to go to Walmart, get your Walmart points, and then go to your restaurant and spend them like they're cash. Why? Well, because of blockchain and crypto. So, and imagine getting involved in that before it happens. So I think it can touch them, but they have to think about it. It's a process. That's for sure.
Yeah, I really like what Rakuten in Japan. They are a major lifestyles company, and they have these rewards. So if you log in, you log into Rakuten, and then you purchase kind of like your frequent flyer miles. You could be purchasing your flights or your groceries with your frequent flyer miles login, and then getting your points back into your inbox. The same thing Rakuten does is that you can purchase from all different kinds of department stores, and then you get your points. And recently, they made a connection with a rail in Japan, and they can now take your reward points that you got from shopping on all these connection sites, and you can off-rail them with Bitcoin now because of their partnership. This is Rakuten. So I do think things like that will be more seamless in the future, and it'll be definitely very interesting to see. And like you said, Kevin, though, some people are just not going to notice, and it's just going to happen, which I think is the point, right? Great, awesome, guys. So, do you have any announcements? We just have really few minutes left. Anything to share about your city, your life, Now's the time.
Well, I want to report that New York is not on fire, and there's no protest.
Fox News.
No. I keep getting this. It's like, those terrible Democrat-run cities are burning. It's like, nope, everything looks out the window.
But did you look out the other window, Dan? The other window. That's the problem. That's the other one. And
look at that one just in case.
Yeah. So I'm sitting in Estonia, where, to be honest, if I left here for a bit and did some traveling recently, and much different world out there than Estonia. We were kind of sheltered from all the nonsense. Didn't really have too much. We had a small shutdown for a little bit of time. Everything's pretty much back to normal. You wouldn't notice that anything happened. I think it shows that small progressive countries tend to make better decisions than big bloated ones. So everybody can learn something from those small progressive countries. And hopefully everybody listened and learned something, and they're going to listen again and keep on listening. For me, if you have a question you want to ask, you can see below here in my, I'll try to do here we go, somewhere here. You can see that's basically me everywhere. So Twitter, Telegram, anything. You can tag me or tweet me, ask a question. Could be about finance, could be about crypto, could be about fractional reserve. I don't know. And I'll answer it. So that's it.
Even your mom is calling you about that stuff.
Yeah. She's sending a question right now. She's trying to tweet.
Kevin, can I be on that call next time? Can I be on that call?
Yeah.
You do know, Kevin, we have this Explain It to Mama game show.
Do you?
Yes,
nice.
Yes. So we'd be happy to have your mom to Explain It to Mama show. We do it every once in a while.
I think if we bring my mom on and have somebody try to explain something to her, they will lose every time. She'll be like the grand champion of the show, because no one will be able to explain a thing to her. It'll be fantastic.
That sounds like good life. That sounds like good life.
Challenge accepted.
Yeah. Hold my beer. I'm coming in.
Yeah.
Amazing, guys. Well, thank you, Dan. Thank you, Kevin. And everybody out there, remember to subscribe to DigeconLIVE and check us out. We're having a lot of these DigiCon shows, and we're adding more and more influencers on their channels to help increase knowledge and listening and learning out there. So really appreciate you guys, and I'll see you next time.
All right. Bye, everybody. Thank you.
Ciao. Okay, yes, thank you everyone again. Now our next segment, we just keep rolling right now on Tuesdays. We have breaking talks where we're discussing something new within the tech industry. And then we're moving on to our next segment for about 30 minutes. And we're going to have a live hero. So the purpose of Give On Live is to empower creators all around the world and to give them a platform to be able to share, to stream their content. So I'm really, really pleased to welcome Dr. Jane Thomason. She is one of our live heroes, and it's just an honor to have you on the show. Welcome, Jane.
Hey, thanks, Christiana. Great to be on the show.
You are always so bright and colorful. It's really nice to have you.
Yeah, it's good to be with you and good to share some stories.
Amazing, amazing. So what I wanted to just kind of start off is tell me, what have you been up to so far in the quarantine? You're in Australia, right?
Yeah, I'm in Australia, and I have to say, because I was really a global traveler, at first it was pretty tough to figure out what to be doing because, I spend my life traveling the world, talking at conferences, meeting people, and working with startups, and then suddenly that wasn't possible. So what I started doing, it's kind of tough, but we all have to work it out. So I started early in March thinking, well, we were going to hold FinTech Week in London anyway, so why don't I just get some of the incredible speakers that we were going to have on FinTech Week, and I'll just talk to them on the video. So we did some FinTech firesides, which were videoed, and I talked to some really terrific people. And then from talking to them, I suddenly started getting, I guess, a bit of a picture of what was going on during the pandemic and what was and wasn't being thought about. And so it occurred to me that there was a place to convene groups of experts from all around the world, just talking about what are some of the big fast-moving issues that were taking place as a result of the pandemic. So these were things like, obviously, life in lockdown and the virtualization of everything, but also we saw rapid movement in the development of central bank digital currencies and mobile money transfers. And so we looked at and SMEs closing down or not being able to access government subsidies. So we had a series of 5 different panels on these topics, including the global monetary system and global commons.
Wow.
And we recently, I'll do a promo, we produced a white paper.
White paper. Hey, Jane, for those who don't know what is a white paper?
Well, it's not a grey paper and it's not a piece of published work. So a white paper, I think a white paper is kind of liberally described as a piece of research or a document describing a project or something that you're doing that's written in kind of quasi-academic terms that is not yet published. So I think the thing about a white paper is that it could be complete rubbish, or it could actually be a work that at some point is going to be publishable and citable. And I'm hoping that, people will read our white paper and go, oh, that's pretty cool, they should publish that. But, the public will give us the feedback on that. So that was a very long answer, but what I've been doing is just staying connected, trying to keep ideas going, and trying to fill those many hours that previously I had filled by traveling and going to conferences and meeting people and doing things.
So wow, you've been productive. Thank you for kudos on that. Now let me ask you, Dr. Jane. So how has your transition been? Just basically talking about like the technology, right? Entering into this digital economy and having to be in front of your screen so long, having to engage human beings through a screen when you're usually used to doing that in person, live and direct. How has that kind of transition been challenging for you? How have you adjusted to that?
Not so bad, because I think for those of us that were digital nomads anyway, we were used to, even though we were, going to physical places and meeting people, we were reconnecting with our work or our clients all around the world anyway. So I think that we'd already figured out how to be digital. I think the hardest thing for me especially initially, was just being locked in my home. Now you'll see I've got a green screen behind me. I'm in a shared working space, and as soon as we were allowed to, I went and got an office. But just sitting at home looking at a computer, and my computer at home, by the way, is about 6 feet from the fridge, so this was very bad for my waistline.
Very interesting. Very interesting. Yeah, it's in some ways, I don't know, in my perspective, in some ways, I've gotten closer to people in this quarantine and with these video chats, because there were definitely people that I would not be video chatting with at all. But since I can see no humans in my day, I always would choose the option of video chatting with these people instead. And it allowed for kind of a more intimate style of meetings, even just, I think also when you have a common tragedy or a common crisis, you tend to be like, hey, are you okay? Like, are you safe? Are you okay? So then that also leads to different places in these kind of conversations, which is
And
interesting.
look, I think also people became more accessible because it almost brought us down to the same common denominator. Even if you were an important person who's head of a big company, you were sitting at home with your kids or, whatever your circumstances are. And I found that actually getting to people and talking to people who previously might have been more difficult to get at became easier.
Oh, yeah, that's very interesting. That's very interesting. Very nice. Okay, so Dr. Jane, can you tell me, what out of all these long conversations, and you published the paper, now what you were mentioning you're noticing things, right, that other people weren't noticing, or what would you say is the top of your mind, okay, well, this is something that is pending now, that we can solve it now, that we can go after that will have impact to society?
Well, I think there's two big ones for me. One is around social transfers and remittances, because remittances is one of the most important income streams for many people in the developing world. And I started to look at this to see what was happening, because I realised that a lot of the migrant workers would be losing their jobs, and so the remittance flows would probably be dropping, and indeed they have been. But that it would be difficult for remittance to actually flow through the traditional banking and Western Union systems. And so I did a series about a month ago, which was really interesting, with a number of companies that are working on remittances, some crypto and some just mobile remittances. And the kinds of things that we've been seeing is actually an increase in remittances, a rapid increase in mobile remittances, even with new demographics joining digital remittances, like older people who would have just always preferred to go down to the money shop and change money. But the money shops have been shut down. And so they've had to take on these digital remittance approaches. But the other one, which I found super interesting and I hadn't really thought about, was talking to a good colleague and friend of mine, Luis Buenaventura from the Philippines, and he runs a crypto remittance company. And one of the things that he said has been happening in the Philippines is that the micro entrepreneurs in the villages who do things like sell Netflix and Spotify cards in the villages couldn't get foreign exchange to buy their Netflix and Spotify cards. So they started using crypto. And I also, I still do quite a lot of work in Indonesia, and have been very connected with Indonesia during the pandemic and what the response has been and so forth. And what's happened there is that there's been quite a large uptake of mobile money by women trying to get their products to market to be able to continue to trade during the lockdown. So I think that's the first thing that we've seen, is rapid uptake and some innovation in the area of mobile money and remittances. And then the other one, obviously, is healthcare, because
Yes,
everyone rushed to try and be able to track the data, keep people safe in their homes,
sure.
remotely monitor patients. Telemedicine has taken off like wildfire. So I think what we've seen is a falling away of some of those restraints and curtains that were there in the health sector, and a real acceleration of digital technologies in healthcare, which for me is a good thing.
Okay. Yeah, that's really interesting because it's by fire, right? Because when before we were like, hey, well, you should do telemedicine because it's easier, or you should do digital currencies because it's going to be less fees, but nobody really cares until they have to, right?
Mm-hmm.
So it's really interesting that these things are happening at this moment, and what I'm really proud of, my mom, my cousins, my different people in my family, particularly, are now interested by force, but their capacity to learn and to adopt these other kind of more innovative structures is actually high. They can do it. They can absolutely do it.
Yeah, necessity is the mother of invention, as they say.
Yes. That's amazing. That's amazing. So tell us, you said you do some work still in the Southeast Asia. Where do you see the greatest need right now? So if there are, business owners in remittance, or people innovating in these technologies, what countries would you say need hands to go out there and to be launching these kinds of products? Where would you say is the greatest need?
I think that's a difficult question to answer, and I'll tell you why. Because I think by and large, people forget that there are fantastic technologists and innovators in emerging economies already. They don't have to wait for someone to New York to come out and help them. A good friend and colleague of mine.
You mean they don't need a savior? They don't need a
No,
savior?
they don't need a savior. I mean, they might welcome a helping hand or someone to advise them from a commercial point of view, but there's loads of stuff going on. If you look at India and Africa, a good friend and colleague of mine, John Kamara, who's a technologist from Nigeria, who's in Kenya, he's rolling out a health data wallet now. So people are doing all sorts of innovations to solve their problem, and some of it's crypto and some of it's not crypto in emerging economies as we speak. And I think that issue of getting funds to people who need them in a timely fashion is going to continue to be really important in all of the developing countries, and also allowing them, if they have capacity to trade or sell, giving them that digital capacity to trade or sell, because we forget that in a lot of developing countries, people earn cash and earn enough money to eat only on a daily basis. So they don't have any savings, they don't have anything to fall back on. They've got to live hand to mouth, day to day. And so to enable them to continue to do that is actually really important.
That's a great point. That's a great point. And well, I mean, so given that they don't need a savior, would you say for companies that have an interest in expansion, or let's say they've already done their own market, what would you say would be important aspects to work with locals or collaborate, or how can we support without kind of just coming and being the other that's trying to impose?
Well, I'd look at it like this. I'd say if you've got a product or a service that has worked in one or more jurisdictions, and you think it might work in another jurisdiction and they haven't got that service there, then I think, first of all, there's going to be modification of your product that will be needed for the social and cultural circumstances of that particular country. And so you will need to go find a local partner to work with, but then you can work with them to potentially modify the product or service that you've got and then roll it out in a culturally, socially specific way in that country. And I do think there's opportunity for doing that, because if you look at the rapid success of Grab and Gojek in Indonesia, for example, they kind of thought about an Uber model and then thought, well, how could we do this in Indonesia? Because not that many people have cars, but everyone has a motorbike. What could we do with motorbikes? And then they sort of developed this uniquely Indonesian model of initially just hiring out a ride on a motorbike, which has become the delivery system for everything and scaled really quickly.
Yeah, that's really interesting. And yeah, I see what you mean. I spent a lot of my career in Asia, and the companies like Uber, Etsy, these certain companies that really wanted to expand, but were really tied to their branding, tied to their colors, tied to their UI UX. it became very difficult for them to expand when they were not willing to let go. And that's why you saw the partnerships, or just the buyouts, because the local player was stronger, the local player understood that kind of market opportunity, but transformed it into a localized product, which is great.
Yeah, I think that's absolutely essential. I think there is a certain arrogance that comes with being a Western tech company. And I think we have to be much more respectful and understanding of, the fact that different cultures and different countries have other ways that they solve their problems and want to use things.
Awesome. Yeah, that's true. That's true. And, Jane, I want to make sure that we don't go too far out, because I want to feature you today and just kind of talk about you. And one thing I'd love to know is just, in this time, this pandemic, this time of quarantine, what is maybe a silver lining in your personal life that you can share with us, or a lesson that you've learned? It would be great to kind of hear how this experience has touched your life.
Well, I think that the silver lining for sure is that I've got a 2.5-year-old granddaughter, and I used to see her rarely, and now I see her a lot, and that is such a joy. So, the ability to be able to be close with family, I think is a double-edged sword, because maybe too close, but seeing my granddaughter is absolutely fabulous. But I think the other thing too, it's a bit like the comment that you made about, in some ways you've got closer to people because you're all sharing a similar situation, and it's been difficult for people. And I think people have ups and downs, and I think, being able to just call people and say, are you okay? And, talk to them, make sure that they're fine. And also I think, work on your own mental capacity to continually to uplift your spirit, because some mornings you wake up, you don't feel that fine. And so then how do you make yourself feel fine? And so I do a lot of what I call appreciation days. So I get out of bed and go, I'm going to have an appreciation day today. I kind of feel a bit flat, but I'm going to walk out and I'm going to hear birds, and I'm going to see trees, and I'll see the river, and I'm going to just kind of find inspiration in small things, because, I think the reality is this is not a perfect life for anyone. And we all have our struggles getting through. And so that's the first thing. And the other thing for me is I'm a big ideas person. So, continuing to connect with people and, think about things like global distributed autonomous communities for environment and climate change, and just go, yes, there's a world after this and we can build some really amazing things. And the white paper, which was really about how do we rebuild after the pandemic, and then connecting with people who also want to talk about that. That's really important for me to keep, a busy mind and an active mind in a contributing way.
I like that because I think, what you're noting, basically, having this time and space, you can get creative. And I loved how you said that you go and you appreciate the trees and the birds and the singing and kind of getting in touch with nature. That's definitely something that has been great for me personally. And I do think that, even people who have been furloughed, out of work, or just their lifestyle has changed, it could be a great time to think, to read books and just kind of let your imagination flow. So I think, that's really interesting. Now I also have a question, so you are, a futurist. You have this very strong interest in social impact. And I'm just really curious, I don't think I've ever asked you this, is where did that come from? Was it your mom, someone you met? Like, how did you gain that interest? Because your career could have gone in many different ways.
Well, I put it down to an experience that I had when I was 16. My mother took the children on a community aid abroad Oxfam study tour of Indonesia. And we went around and saw their different projects, working with, different groups of poor people in Indonesia. And I mean, we went and saw Borobudur and other tourist things at the same time. It was kind of a combination. And I was really struck. There was an Australian woman called Mary Johnston, who was a community development worker in Central Java, who had been there for 14 years, working with poor communities, and she showed all of the things that she, together with the communities, had achieved during that time. And that was just incredibly powerful for me. And I thought, I want to be able to do that, because I had compassion for the poor, and then to see the way that this woman had been working with them, I thought, that's it. That's what I want to do with my life. I mean, I didn't have a really good picture of what that pathway was, but it was just a moment where I thought, look, there's a whole world here of people who are in need, and somehow I can apply my skills and my talents to doing something about that.
I love that. I love that. And that shows, I would just love to encourage you in the fact that, I'm sure there are people who can say that about you, who can say, I heard Dr. Jane speak about this. I saw her doing that. I saw that she's bold and she's unique and she wears all the bright colors that she wants. I'm sure there's people who can see you and will remember you and be like, you know what, that inspired me to do this kind of impact work. And it always looks different. I think I remember, being raised, conservative Christian, I thought I was supposed to be Mother Teresa. I thought I was supposed to be out. I'd go to Africa, go work with the kids in the wilderness. Like, I thought I was supposed to do that. And then I just kept thinking, well, but I like business and I like Wall Street and I love wearing suits and power. Like why do I do that? Like, I can't be Mother Teresa. I'm not going to be a good Christian, But in the end, everyone has their own path and their own skills and talents that can contribute and do impact in the world. Do you have any tips to maybe young people right now at home or in this time of transition or quarantine? How do you discover your skills or kind of your path and kind of make decisions when there's so many out there?
Look, I think it's really hard for young people. I think it always has been. I always say that the 20s is the worst decade of your life, because I think, yeah, I mean, it's kind of fun, but in terms of, you're running around, bumping into things, you're trying to have ideas, you're trying to imagine what it is you can be, you're sort of playing the mating game. It's just so confusing. And I remember, I met a woman who at that time was very high up in the Australian government, and she later became the ambassador to one of the Scandinavian countries. And I said to her, how do you get to where you are? And she said to me, 20 years of really hard work. That wasn't the answer that I wanted,
No.
So I think it's hard. But I think, like everything, life is a journey. And if you're out there trying things, knocking on doors, because often you only discover what you're good at by taking a pathway that turns out you're not good at. And it's that, don't be afraid to fail, just step out there, just try something. And if it's not for you, it's not the end of the world. You've at least learned that, and you've learned something about the direction you could go. Because even for me, that I was inspired by this woman, who sat in villages in central Java for 14 years. And that's kind of the pathway I started on. But then I realized, sitting in a village here, in my case, it was in Papua New Guinea, with these 300 people, all I can do is a little something for these 300 people. But it's the government and it's the policymakers and it's the international organizations that make the decisions that impact on the lives of these people. I need to be up there if I want to, yeah. And so, but that was my journey, because I thought, I could sit there and do the same thing as Mary Johnson had done. But I realized that I would be much more effective, working right up at policy levels in the system.
I really like that. Yeah, I love that. And yeah, and we need the Marys, we need the Dr. Janes, right? We need everyone in between, because it's a whole ecosystem, it's a system, right? But I do think, to your point about when you made that realization, I think for me, as I see a lot of the things going on right now with advocacy and, in particular, Black Lives Matter and even just minorities. This month is actually National Hispanic Heritage Month. I'm Latina, so a lot of times, these communities are trying to make an impact with their own demographic, not realizing it's kind of that slow and steady legislative kind of track and really getting the voices heard, because the lobbyists that are backed by money, right? They're getting their rules and regulations done, and it's invisible. You don't see it, but it affects you.
Yeah, that's right.
Yeah, I think that my bank, I can't make more than 5 transfers from my savings account to my checking account because of a law that Reagan made in his era. I'm affected. I never met the guy, right?
Yeah.
So I think that's really interesting. Yeah. So great, Jane. I did think that's awesome. So what is next for Dr. Jane Thomason? What's next for you? What's exciting? What's new and exciting in your life?
Well, I'm working on a big idea at the moment, and it's just I'm in Australia, so I'm trying to think about something that might impact on Australia, because it just makes sense. And, I believe, so the north of our country is pretty arid desert country, and not very well populated. And I've been thinking about the fact that now that we've got technology, both in agriculture, in hydroponics, in marine permaculture, and in manufacturing synthetic foods and advanced manufacturing and all of these things, some of the constraints that have meant we couldn't develop the north of our country don't exist anymore. So I'm busying myself, amongst other things, with really trying to come up with a proposition that obviously with money, but with technology, we could develop a sustainability supercluster in Northern Australia and really develop the north as a food producing area of the country. So that's one idea.
Cool.
The other thing that I'm doing is curating a series with the NED in London. The NED, so amazing. So we'd started, we were going to do a series with the NED in person, and we launched London Blockchain Week at the NED, and everyone loves the NED, and they have a big NED club community. So I went back to the NED and said, hey, no one's open, but why don't we do a series anyway? So we've started NEDTech, #NEDTech.
Cool.
Right? Yeah. So every fortnight we're running a sort of cutting edge blockchain and technology series for NED members. So that's another thing that I'm doing. So lots of things on the go.
Awesome.
Never want to have nothing on the go, but anyone sign up to NEDTech. We have great speakers and new insights every fortnight.
Amazing. And for everyone who doesn't know, actually, Jane was fundamental in doing FinTech Week, Blockchain Week in London, in the United Kingdom. So this is an international woman, everyone. And so she has a very strong group in the United Kingdom. And she, I've been personally involved as a speaker, as an attendee in these wonderful events. And the last one was in March, where you did host that one meeting at the NED. And for everyone who doesn't know, the NED is a luxury 5-star hotel, which has a gorgeous lobby with wonderful live music venue, but also has kind of, what would you call it? Is it a membership group? What is
it's a private members club. It's a thing in the UK. Private members clubs are a thing in the UK, and they have many of them, and they're quite exclusive and quite expensive, and it's all very discreet. Yeah. But the NED Club, I believe, has got around 3,000 members, a lot of them in the financial services sector. And it's related to Soho House, that some people might have heard of, which is, so all the kind of arts and film community tend to congregate around Soho House, and the NED is the equivalent for the finance community.
Oh, that is really interesting. Yeah. So which you mentioned, can you tell us again when those NED Talks are going to be? NED Tech Talks?
Yeah, they're at 7 p.m. every second Wednesday. So there's one coming up this Wednesday, which is every second fortnight we do NEDTech Strong Women. So it's a NEDTech Strong Women one. Yep, coming up this week. So we'll be tweeting that out, and there's Eventbrite, and I'll send Christiana the link. So if anyone wants to join, you're super welcome.
Oh, we would love to share that. We're super, super excited about these great opportunities for networking and for just learning. learning. And wow, time flies when you're talking to awesome people. And again, Jane, I just want to thank you for taking the time. And hey, is there anything else you kind of want to share? So this segment, this is entering the digital economy with a bang. Our purpose is to, prepare people for this new digital economy. Any advice you would give, just actionable steps for people kind of getting into this now?
Well, look, I think the thing to do is just decide you're going to do it, and then get on the web, join some LinkedIn groups, find some meetups, start connecting with people, follow people on LinkedIn that you think are really interesting and read what they're posting, and just start engaging, because that's how we all got started. I didn't just go, oh, I'm going to be a social impact blockchain thought leader tomorrow. I just thought, oh, this is really fascinating. And there's stuff here I need to know about. And then once I started knowing about it, I went, I have to tell people about this, because they don't understand how important this is. So I think it's just, you start somewhere, you start reading, you start understanding, you want to be interested in climate, you want to be interested in remittances, finance, DeFi, and just start engaging with those groups and get out there. I had a woman that I met at Blockchain Week, and she's a geologist, and she's going, I'm really interested in blockchain in mining, but no one seems to be doing that. And I said, listen, just do it. And I'm so happy. She just messaged me this morning. She had a blockchain in mining webinar, had 160 people there, and it was super popular. And it was just from that one conversation. I said, start a LinkedIn group. And this LinkedIn group's got loads of members, and she just had a really successful webinar. So, don't hold yourself back. Just get right in there. And in a digital world, anyone can do anything from anywhere.
Exactly. Even shows like these, you used to have to be a broadcasting studio. Now, any fool with a camera, a webcam can start a show, We're happy to be some of those fools. That's us too.
We could have a new series, Fools with Webcams.
Exactly. I love that. I really do. And I'm so curious, because I read the Forbes article, one of that featuring you, and you mentioned something about how your son told you about Bitcoin and you didn't like it at first. Can you tell us that story?
Well, I just ignored it. I just thought, at that time he'd just come back from the UK and he was looking for a job. And then he comes and thrusts this pamphlet in front of me going, Mum, they've invented this digital currency. You should buy some. And I just went like, go away, go, get a job or something. and I yeah. And look, that was 2010. I could have really been super rich by now, but I just let that one pass.
Wow. See, that's really interesting. I think that really does also show, like, hey, if someone tells you something, even though it's completely random and it's kind of crazy, well, at least check it out, That's cool. Yeah. That's cool. What's your son up to now?
Oh, he works in innovation and entrepreneurship, and he had his own co-working space, all these different things. But yeah, I'm kind of lucky. Both my children work in technology, and so we can have some great conversations.
That is so cool. Wow. Well, Jane, how can people find you if they want to be in touch? And you mentioned LinkedIn groups, Twitter. So where can people find you if they want to get in touch with you?
I think LinkedIn's the best. I do Twitter a bit, but I'm not that. I mean, if you tweet me, I'll find you. But LinkedIn is much more consistent.
She said, if you tweet me, I'll find you.
Do.
Okay, so LinkedIn, Dr. Jane Thomason. We will also, yes, please, we will be sharing her event links, FintechTV. We'll share all your links, Jane. We thank you so much for joining us. You are our live hero. One day we'll have these kind of Emmys. We'll love to do that.
Well, hopefully, it's just. I just want to let the team know it's 4 o'clock in the morning here. So it's now 5 o'clock in the morning. I got up at 4 o'clock, so I'm looking a little bit disheveled. But if you do something live in London, I promise I'll be looking less tatty.
Listen, you do not look disheveled. You look fantastic. You're always so bright. I love your style. Love it.
Thank you. And thanks for having me.
Yes, it's my pleasure. All right.
Okay, bye.
See ya. Thank you, everyone. Everyone who's watching, please remember to like and subscribe. We have this DigeconLIVE show, but on GiveOnLive, we also have a bunch of different influencers that we feature because the purpose and the mission is to empower creators from around the world and to have amazing content here with you. Live and direct. This is Miss Viva, and I'll see you on the next stream. Ciao, ciao.